Hi, mining community. Welcome back to another episode of the Dig Deep, the mining podcast. And today's returning guest, who appeared back in July 2021, so just nearly a year ago, which was episode 153. We have Anthony Milewski, who's the chairman of Nickel 28, who are innovative battery metals focused investment vehicle, focusing on the metal streaming and royalty agreements, offering investors exposure to metal integral to key technologies of obviously the electric vehicle and energy storage markets. And Anthony's an entrepreneur with a background in finance and law, and he's here today to give us an update on Nickel 28, but also talk about what is happening in the world at the moment with Russia, China, and the markets, and how this is going to impact the global supply of materials for now and in the future. So that's welcome, Anthony, to the podcast. How you doing, Anthony?
Great, thanks, Rob. Always appreciate getting invited back on. So thanks a lot for the invitation and looking forward to catching up.
Yeah, appreciate your time as well. I know how busy you are and you're off to PDAC next week. Unfortunately, I can't go because of family commitments. So yeah, really appreciate you taking the time out to record this episode. So I wondered if you can just give us a quick snapshot of your background for those that didn't listen to the previous podcast and who may want to also go back to listen to that episode. Just wanted to give us a quick snapshot of yourself and maybe even give us an update on Nickel 28 as well.
Sure. I mean, I guess I would just characterize myself as an entrepreneur. I've always enjoyed markets and thinking about investing. And, early on, I started off actually as a lawyer, interestingly, working out of London and Moscow, working on commodities deals. And I became fascinated with commodities markets, how they function, supply, demand dynamics, and ended up at a hedge fund. And then later at a private equity firm before striking out on my own to create companies and invest in, metals that are related to energy transition. And really that's a range of metals, whether that's copper for electric vehicles or nickel and cobalt for batteries, with the idea that when you have a new technology, a new demand come into a given commodity, you see a complete structural change in that commodity, and there's opportunities. And we see that today with copper, with nickel, with cobalt, with lithium. And so it's an exciting time for those metals in the same way that, a decade or more ago, China came in and built their infrastructure. Well, that was a great time for iron ore and coal. So we're seeing that same type of opportunity. And what we're focused on at Nickel 28 is really nickel and cobalt. We're the largest producer of MHP in the world, mixed hydroxide, which is a form of nickel. And, we've had a run of great quarters here with our production numbers at over 100% of nameplate capacity. And, I think if you look months, what we're really focused on is paying back the debt that we took out to help build that mine. And when that's repaid, it'll generate a pretty material amount of cash that we hope to dividend back to shareholders. So it's an exciting time. It's kind of one of those times now where you're just grinding away as a shareholder waiting for that repayment. Management's focused on making sure that those operations continue. And we kind of look forward to the next 18 months. So it's a great time to be in nickel, as you know.
Yeah. I suppose since we last spoke just over or nearly a year ago, what challenges have you had with your business?
The same challenges that every business has had. You look at the global supply chain in the commodities business, you're shipping commodities. And so you look at all of those issues that came up. I think in particular for nickel, we had this crazy incident on the LME where there was a huge open interest short. And in fact, just I think yesterday or the day before, a bunch of funds sued the LME. You had these open interest shorts and they canceled trades, and it's just kind of this huge debacle. And that has really shocked the nickel market because until that moment, all contracts had some reference to the LME nickel price. And I don't think that's going to be the case going forward. I think you're going to try to see people move away from the LME because of the way they handled that. Of course, I don't know exactly what that's going to mean yet, but that's a pretty dramatic moment, maybe one of the most dramatic moments in the history of the LME, really, besides a couple others there with tin and so on in the 80s.
How do you see the outlook for the remainder of the year going into next year with some of these energy and battery metals, like you said, nickel, zinc, copper, etc.? How do you see each one playing out over the course of this year, especially with what's obviously going on in the world?
It's a bit tricky. If you think about in particular, say the metals that are related to electric vehicles, China's locked down right now, and automobile sales are down, and those automobiles include electric vehicles. And so, I would think that, the market might be soft, until really the entire world is back online and kind of operating at a normal or a new normal. I think it's possible that you just see weakness in a bunch of these commodities. Now, I think that's short-lived, in particular for China. I'm not so sure they're going to take the same path as the West, which is trying to harness in inflation through rate hikes. Instead, China, you might actually see stimulus to try to stimulate growth inside of their economy. And, historically, that's been through infrastructure. But in the last number of years, they've been doing that through green energy. So, if that stimulus comes about, then it could be pretty material for battery metals and really energy transition metals.
How's the war in Ukraine? Obviously, as we're recording this, and in case people see this in years to come, obviously, what is the war, or how is the war in Ukraine impacting global commodity markets at the moment, as you see it?
Yeah, I think, look, in terms of the actual specific commodities being impacted in Ukraine, grain is actually one of the largest ones impacted. And in the West, that probably just means your loaf of bread costs 50% more. But in Africa, it might mean that you don't have enough grain, or, there are allegations now that Russia's actually stealing the grain to sell it. So in terms of the actual physical production of materials, I'm not sure it's so great, other than some of the soft commodities. However, where it really matters are around the sanctions. So, you see Western Europe and the US sanctioning oil, and you have conversations around gas. By the way, a large percentage of the world's nickel is produced in Russia. And so, what it's really done is it's disrupted a bunch of these commodity markets and changed the flow of metals as well. You're not going to see Norilsk potentially selling to US battery makers or superalloy makers. So it's highly disruptive, but not necessarily on the production side, just as much as how the sanctions impact on companies really being able to buy it.
And again, I read stories around the Russian ruble is now backed by gold. Again, how will that affect?
I think it's a little more nuanced. I read these stories too, and I think the one thing you have to remember is that it's not convertible anymore. So yeah, like while you see that ruble strengthening, I'm not sure that's not being artificially propped up, because I don't know how convertible that kind of currency is. It'd be interesting to understand that a little bit better, the liquidity there, because clearly what they're trying to do, of course, is take away the dollar as a weapon. You've seen the US weaponize the dollar, and you saw what happened with SWIFT or seizing Russian assets abroad, all of which have pretty crippling effects. And I think if you're sitting in Iran and North Korea and China and really anywhere outside of maybe Western Europe and Canada, you're probably thinking, we need to do something different. And so probably one of the effects of this that's material over the next decade is competitors to SWIFT are going to emerge. They've already emerged, they exist, but they're going to start to really be relevant. Inside of Asia, Russia, China, they'll use different swap lines. They won't use SWIFT. All the former Soviet Union countries will use the Russian equivalent of SWIFT. China has a system. So that's a longer term consequence, but I think you will definitely see competition with the US dollar. And really it makes sense if you think about it. This hegemony, this world that we lived in, is really that post World War II world, and that generation is passing, and there's not a lot of people left from that generation. And so I think what this war has done is hastened kind of that, I wouldn't call it the end of that era, but the beginning of something new and different, and probably more volatile, as the world goes from a unipolar world to really a world that has to share power between China and America at the very least. Another thing I think we've seen here with the war is that Russia is just a country with nuclear weapons, not really any particularly powerful military. I don't think anyone is really afraid of the Russian military anymore. I think they're scared of the nuclear weapons, but that probably means that Russia's not going to be able to take its place at the table like it wants to, just really because of its showing in Ukraine. So I think there are a bunch of consequences, that ultimately all have maybe a really material impact on metals and mining. Because does it mean that regulators in the Canada and the US are more apt to help mining companies permit and build projects? It's something they haven't done in a generation now. It'll be interesting to see if that happens as a result of all this.
Obviously, you mentioned supply chains earlier. Obviously, how have they been affected from your perspective? And what is the solution to improve these moving forward?
Well, they were impacted because half the world's cargo containers were sitting in LA and the cargo ships weren't going back. Because they just had this huge disruption. So that's short term. That gets worked out. I think the longer term kind of fix here is probably de-globalization, which is to say that certain types of production maybe move back to the markets. You have more injection molding. You have more of these things happening on the periphery of the big cities in the US and the West, just simply as a hedge against these type of events.
Yeah, so bringing obviously manufacturing back into your own country as opposed to always necessarily relying on China and some of the Asian countries that I take it everyone started buying their goods and services or goods because it was a lot cheaper. And now obviously it seems to be bring those services and manufacturing services back into your own country.
Yeah, that's right.
Obviously, we have high inflation at the moment, and it's obviously increasing throughout the world. But what about China and obviously their lockdowns, as you mentioned? How's that going to impact the markets?
Well, you would think there would be a big demand shock. Everyone's sitting in their house, no one's using any commodities. So, and this kind of plays into my thinking that at least in the short term, we could see weakness in commodities before they rip much higher. It could be kind of a false sell-off, as it were. So, if people aren't doing anything other than sitting in their house, they're not consuming commodities. So I would see this as being short-term kind of a challenge or a headwind for commodities. But I think the other side of it comes pretty quick.
Will these geopolitical events mean that more mines in Canada and the US get funded, and I suppose elsewhere around the world?
It should. I don't know if it will. The one thing people forget is it takes 7 to 14 years to build one of these big mines. And it just is a long, arduous process. And, the way the capital markets are structured, the money is very short term and it's tricky. You would hope that it would happen. You would hope there'd be tax incentives, but I'm not seeing that that's happening yet.
And do you think governments will get more involved with the mining industry? Obviously they do get involved in not necessarily funding, but putting regulation in place. Do you think over time, because they will see the shortages of certain commodities, that there will be those incentives will increase?
Yeah, we saw Cameco buying 4 million pounds of uranium out of North America. The headline yesterday, which will date this podcast, but they're going to have to, just the way the world is going and with the focus on Africa that China's had. So they're going to have to. I don't know if they're doing it yet, but they're going to have to if they want to secure their supply chain of basic materials.
Yeah. What other sort of issues or challenges do you see that could emerge over the course of this year and maybe even go into next year that will affect, I suppose, the mining industry as a whole?
But yeah, the biggest one is lack of capital. So here we are, big sell-off in the market. No one's raising any money. So any of these stories that wanted to raise money to build something just aren't going to do that. So once again, it just kind of kicks that can down the street, as it were. And so, I think you just see a lack of funding.
Do you also see more projects emerging over the course of this year? Obviously, there seems to be
because we've not had an exploration cycle. I mean, there've been almost, let's talk about what new discoveries there've been. I mean, almost none. There've been re-drilling old discoveries. So we're not replacing the pounds or the tons in the ground. And someday people will look back at this as a pretty irresponsible time. There's only so much copper. There's only so much of this to go around, and we need to think about that and utilize these resources in a way with recycling and and just in a way that makes a little bit more sense than we have been. Sorry about that there. And so I think that's important to maybe start to think about that more.
Yeah, obviously there seems to be an increase in capital within the exploration space over the last few years, obviously probably a few years too late, but obviously moving forward, do you see more money going into exploration, or do you just see it being pretty steady?
I see no money going into exploration right now. I mean, there needs to be more money, but the market has sold off. It's a risk off. Inflation. The multiples have come out, of the S&P and the NASDAQ. So it's hard to see that that's going to happen. So, it probably just builds to the next big cycle, right?
Yeah. And where would you say we are in the cycle at the moment?
Well, unlike, say, the super cycle, which was driven by China, I think now they're going to have kind of a bunch of smaller cycles around specific metals, like energy transition or whatever it is. So I don't see one big cycle, but more specific cycles for specific metals based on demand from technology or EVs or batteries or whatever it is.
And so obviously with the energy and battery metals that you're involved with, where do you see what life cycles are they in? So if you look at obviously zinc.
Well, like take nickel. I mean, take nickel as a way of example. It's a multi-billion-dollar enterprise to build a nickel mine. And there's no large-scale nickel mines being built outside of Indonesia, which is really China's supply. So we all kind of agree that we're going to need more nickel here, and the mines aren't being built. So there are projects identified. I mean, there are projects that can be built. So I think copper is in a similar spot. So I think you're not seeing the commitments to build the mines yet.
Last couple of questions. What's the outlook for the remainder of the year and going into next year for nickel 28?
Yeah, look, I think our next big catalyst is the repayment of debt, which is still, probably 18 months away. And so for us, it's just continue to produce nickel, sell that nickel, and move forward. This is just a time where we have to do that. There's not going to be a lot of flashy news. It's going to be around quarterlies and updates around production.
And lastly, is there anything else that you want to add? Obviously, we've spoken about some of the energy and battery metals, and obviously talk about Russia, China. Is there any sort of conclusion that you want to, or anything else that you want to add?
Yeah, I mean, I think over the next decade, the most interesting thing are environmental commodities. Whether that's carbon credits, methane, green hydrogen. There's a bunch of them. I mean, I think this is an emerging, interesting sector and something that I'm kind of thinking about and looking at. So, it's worth chatting about that sometime.
Yeah, certainly. Well, more welcome to come back on the podcast later this year or next year, once you've got some more news and some other angles that you may be looking at. So really appreciate your time, Anthony. If our audience wants to reach out to you, got any questions, how can they go about doing that? And obviously your social media.
Twitter is probably the best platform to do it on. Just you can Google me on Twitter and find me.
Yeah, we'll include those in the show notes as well, accompanying this. So really appreciate your time. And those that are listening, appreciate your continued support. Appreciate if you can share this episode with others, friends, family, others in the industry, ex-colleagues, colleagues, etc. Obviously get the word out. So until next time,